What's up, everyone? Welcome back to another episode of Momo Trades. Today, we're going to be going over a bar-by-bar chart analysis of the E-mini S&P 500 futures, and I'm really just going to be showing you guys what goes through my mind as the bars are printing on the chart. And this is a practice that I do every day at the end of the trading day, just to go over the trades that I took and to go over the setups. Obviously, it's much easier to do it when we're looking at historical data versus live data, but nevertheless, it is very good practice. So I really suggest that you guys watch and pay close attention to the videos so you guys can test yourselves just as I'm about to do. So let's just get right into it. This line in the middle is the break from the overnight session to the session today, and all the way on the right side, it is around market open. So right now, I really can tell that there's a little bit of upward bias, but as of now, there's the potential for something that looks like this in terms of trading range. But what I always like to do is draw my trend lines. We can see that there was a break and a new high, and a lot of strong momentum. So at this point, I was really thinking that, okay, there can either be that uptrend or maybe even something wider, but I'm really just going to wait and see what happens. And as we see, we ended up trading higher and higher. And what I'm starting to look for are second entry longs. So if we're counting from this new high, and at this point, I can really get rid of that trading range because now I'm starting to see a lot of bullish momentum, and it doesn't really seem like there's a trading range structure anymore. But if it turns into a trading structure, then I will be quick to reverse my thinking. So I'm looking for any pullback second entry long at the EMA with a good signal bar, given that the uptrend is still in play. So we're looking for first entry long right there because that bar broke above this one, and we're going down and down again. And when I see this bullish bar above the EMA, we have a lot of momentum. Even if this wide trend line or trend channel isn't valid, something like this still is valid. So we're looking for a new high regardless, because in price action, once there's a break of a trend, it's not until there's a new high or new test of the extreme when we can start looking for short entries. So as soon as the next bar breaks above that one, I'm going to go long. And let's see what would have happened. We would have had to sit through a little bit of some chaos, but the trade would have worked out for a 1-point scalp nonetheless. Now that we're getting to these highs, I'm starting to be wary of any more long entries, and we can see just a lot of bars being stacked up. So I always like to draw any channel that allows me just to visualize what kind of congestion is going on, so I avoid any long entries, especially like into these highs, because we do have a lower high right here with a bullish bar, and it's technically a failed second entry short, because if we're going from these lows, we were going up, we had a first entry short because that doji bar broke below that one, and we had a second entry short because this bar broke below the one previous to it, which created a matching high. So if you would have gone long right there, you would have actually got trapped. And the reason being, there's just too much congestion. You're not touching the EMA. You already bounced 3 times from these highs, triple top. You definitely don't want to go long, especially that we're testing this general high. So there might be a time for a reversal. So once we do finally start reversing, now we can start looking for some potential reversal setups in the forms of failed second entry longs. In the uptrend, we're looking for second entry longs, and once the uptrend is over, then we can look for failed second entry longs. So if we're counting from this triple top, we have a first entry long right there, followed by a second entry long So if the next bar breaks below that one, I can sell, creating the failure and trapping all the people who went long at the bottom of this trend channel when we're still looking for a new low. And it would have worked out once again for scalp. Now we have this short-term trend of breaking a new low. So once again, the trend in terms of the short-term downtrend could potentially be over. So we just want to sit on our hands and see what happens. Now that we have multiple legs, obviously we can start drawing our wider term channel. And once again, we can start thinking, okay, maybe this range really is valid, and we're going to bounce somewhere around these lows, and the highs of the range were right around there. So now we can start looking for second entry shorts if they present themselves. And there's a first entry short right there, followed by a second entry short, but obviously this bar is not bearish, so we do not want to take any short, and that should be pretty self-explanatory. But we did end up testing these lows once again and even pushing lower. So what do? Let's just extend our trend line. And obviously we should make it as neat as we can, but we'll see what happens. So we have a break. We could potentially test the lows, but nothing's guaranteed, and we start bouncing out. Now, once that we start bouncing out, we could maybe look for failed second entry shorts. If we're counting from this low, we were going up. We had a first entry short, followed by a second entry short, because the first entry short was right here with this green bar, and once we broke above the green bar and went down again, that would create a second entry short, and the failure occurred right there, but there's no good signal bar to enter on, so we just have to look for what happens next and really just wait for any trend to resume and present itself. And right now we just have a lot of choppiness. So what we can do, we see that there's some sort of a downward bias. Even though we're kind of choppy, there's this downward bias that looks kind of like that. But at the same time, we're looking to potentially bounce if this trading range is valid. So we just have to keep in our minds, okay, there's a weak downtrend. We are trading at the bottom half of this range, but it does look choppy, so I'm going to wait for a trend to resume. And most likely this downtrend isn't valid, but what we're doing is really just trading in the bottom half of this range. So let's see if we have any good entries. And once we finally have a short-term uptrend, all we do is draw our channels. We have a break, no new high yet, and we finally get a new high. And even though we see this bearish bar right here, a lot of people got trapped going short at that bar, even though, okay, we had an uptrend, we had a break and a new high. We did bounce once, twice, 3 times. This would be a 4th time bouncing here. But in these sort of trading ranges, we definitely want to wait for lower highs. We can't just see one signal bar and go short off of that. We want to see a lower high confirmation, especially because who knows, there might be even a wider trend that looks something like this, and this was just one leg up, because there's also this short-term uptrend right here. So we definitely do not want to go short just yet. And as we see, a wider trend actually might be valid. So once we bounce out, we're looking for second entry longs once again. And we see that we had a lot of bullish momentum, and we can see that the range is probably in effect. So once we reach these highs, we just want to be cognizant of the fact that, okay, we might be approaching the highs, and just to not go long directly into those highs. But like we said, we're looking for second entry longs. So once we see this high, We have our first pullback, a first entry long right there, and a second pullback, second entry long, but this signal bar is obviously terrible, so we cannot go long right there. Now, we are approaching these highs of the range once again, so any long entry must be taken with some extra caution. And we actually have a second entry long right there. So we have a new high. We went down. We had a first entry long because this bar was one tick above the green one. We pulled back again and a second entry long formed. But even though this is a nice signal bar right there and the trade would have worked out, it does look very congestive to me. It would have worked out. It would have been a great trade, but I do see a lot of congestion right here. I mean, look how many bars are stacked up right there. So I really don't like that trade, even though it worked out. And we see that we ended up pushing higher. So either this trend is valid, we had a break in a new high, or because this trend seems pretty strong to me, there could even be a wider channel in play, but we really don't want to play the wider channels. We always want to keep the short-term trends in the back of our heads as the premier, more accurate trends, because these shorter-term ones allow for a lot more conciseness and just accuracy in terms of what the price action is doing. So we have a break and a new high. We're counting from these highs. We have a first entry long. We're going down, and a second entry long potentially above this bar. And let's see if it would have worked out for a scalp. If you went long one tick above that bar, you would have went long 48.25, and yeah, you would have been trapped. And it makes sense. Like, we had this short-term uptrend, a break and a new high. We're potentially at this trading range. I wouldn't blame you if you did take this long, but once again, this short-term downtrend is still in effect and it is valid, and we did not test the low yet. It is a hard trade. It is low risk, so you might take that, but you got trapped this time. And the trend begins to resume once again. And at this point, we really don't want to look for second entry longs. We're getting really choppy, and we can see that the trend is just weakening. I mean, look at this price action versus this nice 45-degree angle. So at this point, we can really think, okay, there was a break in a new high. Let's look for potential reversals. And we end up just having a lot of choppiness. So at this point, we just want to draw our congestion once again. And we can see that we're just going from the highs to the lows, back up to the highs, and you definitely just want to stay out of this choppiness. I mean, at this point, you see a double top, a bearish bar, but there's this short-term uptrend. You did bounce here once, twice, 3 times, 4 times, but the entire last hour and a half, 2 hours, you've been trading up, and you don't know if this is that much of a valid range because we didn't reach all the way to these lows. So you could argue for that trade, but I really would stay away from it, and just the markets just went out without many second entry longs. But let's take a look at that trade right there. So once we bounce out, we draw our trend line, of course, trend channel. We were counting from these highs. We were going down. We had a first entry long right there, followed by no technical second entry long, but you can say this is a hidden second entry long, but it's very advanced trade and you wouldn't want to take it. And what I'm looking at is you're going down, you had this pullback, you had a first entry long because the bar all the way on the right side ticked above that one. and you didn't form a new low, but because you had a matching low, some may consider this a hidden second entry long because this bar all the way on the right side broke above the one to the left of it. But you definitely don't want to take this long for the congestion. Also, even though it's a nice bullish bar right here, um, most of it is actually below the EMA, and which is why the trade didn't work out. And yeah, I mean, at this point of the day, it's getting really choppy. There's no real concise price action, and it just looks like a lot of choppiness. So you definitely just want to stay out of it. And yeah, it lasted for the rest of the day. But so it was a pretty quick rundown of bar by bar chart analysis. I mean, this was just good practice for me. I hope you guys got some value out of it. Leave me some comments, subscribe. Have a good day.